All right, good morning. Today is October 16th, 2024, and back with another edition of the Wednesday Live Show. And lots going on. The election's like 20 something days away, and the market had an interesting outside reversal day yesterday. A little bit of weakness. We'll take a look at the charts here in a minute. I'll show you a couple other outside reversals that didn't turn into anything, but it's always something to note. And, quite frankly, as I look around on the charts, it sort of feels like the risk at this juncture. It seems like, the market obviously is at the all-time highs, and which is constructive, right? Charts are going up, everything's near the highs, but at the same time, looking at some of the larger time frames, it's pretty extended. And so it's going to be interesting to see how this plays out mid-October. So before we do that, I wanted to take a look at, I know a few weeks ago I brought this chart up, but here's something else that's at an all-time high. All-time high is the Buffett indicator, right? And this chart that I found only goes back to 2005. But the Buffett indicator, right? It's basically the US market cap compared to GDP, and it's at an all-time high, as you can see, 200%. So, as we know, Uncle Warren has lightened up on a lot of his stocks, and he sold some Apple, he sold some bunch of Bank of America, all that. He's sitting on tons of cash, and so it's just something to keep in mind, right? The charts can be constructive. The market, obviously, when the market's hitting all-time highs, there's blue skies above. There's no technical resistance on the charts, but at the same time, as we all know from experience, when stocks themselves or the market or anything gets extremely extended and sort of overbought, then there's always the potential for a pullback, right? But this is an interesting chart. So this is as of yesterday, obviously. It's got yesterday's date on it, but this is the seasonality for October, right? October seasonality, and apparently it goes all the way back to 1928. So that's a pretty big sample size, if you ask me. Um, the funny thing about the market, I always say the market's got more stats than Major League Baseball, but the funny thing about the market is there's a lot of people out there that basically just use historical data to assume, that the market's going to behave similarly going forward in the future, and that may or may not be the case because we've seen lots of times. I remember really vivid time of an exception was in 2018. 2018, the stock market had its best January in a whole bunch of years, and everybody was making a big deal about that. The people look at seasonality and all these stats and that, and so they always say so goes January, so goes the year. And so 2018, and then by the end of the year, it was actually down like 6%. And so it was the worst year for the S&P in X amount of years. And so you got to take all the seasonality sort of with a grain of salt. It's interesting to look at, but obviously anything can happen. And then you'll see these seasonal charts that will be like on election years, And so this is basically just generic October seasonality about as far back as the market goes. And you can see this period of time that we're looking at here, if this was an actual roadmap. And I like to look at these things just to see at the end of the month, how they sort of played out. But here you go. The rest of October is essentially nothing. It's flat, right? Because if you look right here, this is November, right? So we got to muddle through the next. Well, it's about 2.5 weeks left in the month, right? 2.5 weeks left in the month, and then take a look right here. You've got the beginning in November, and of course, as we can see on this graph of seasonality, November is typically a really strong month. So, and then there's the whole debate about what the Fed's going to do in November. So, I've left this chart. Usually I look to add some new graphs and new things each week, but this particular chart is going to have a lot of longevity here because this is basically the history of the 1 year performance after the Fed starts cutting rates, begins a rate cutting cycle. So this is actually going to be a viable piece of information going forward for the next year to see where it falls. To see where it falls here in the historical analogs of the Fed beginning a rate cut cycle. So inflation ticked up a little bit, as I recall, the last week, and unemployment's ticking up. So the Fed's really sort of painted themselves into a corner. And then you throw the whole election into everything, and who knows what's going to happen in the short term. Honestly, I'll be glad once we get past the election, but we still have the rest of October, and then, as I pointed out here, beginning in November, we enter like the seasonally strongest period of time for the whole year. So let's look at the S&P here. There was a lot of consternation and talk about yesterday being an outside reversal candle or a bearish engulfing candle, whichever terminology you prefer. But so interestingly enough, there's a couple other ones on the chart. This one stands out. This one stands out in particular. And this was really interesting. I'm pretty sure we talked about this at some point back then because you had a very similar sort of candle right here in July. You had the run up, and of course it's important that you have a preceding run up, and then you get one of these sort of candles, and that typically, according to the textbooks, here's another one right here. That one was sort of a major bearish engulfing candle, and the run up that occurred prior to it was really something. But interestingly enough, look at the next few days, right? That's what's interesting about this is normally you see a candle like this, like here's one back here. Market was kind of had a run up, but it was kind of going sideways. Then you got this huge, the huge gap up. I think the gap up has to do, like this one really didn't gap up, right? It opened about the same place the prior candle closed. Yesterday, we had a little bit of a gap up, but the gap up was not above the wick of this candle. So, there's a few different. Here's one way back here on the left side of the chart. If you can see my mouse over here. There's one that also had a huge gap up through a narrow, fairly narrow range bar. And that one did kick off a sell-off. But look at the few days following it. See, that's what I'm looking at here is like the next few days following these sort of bearish reversal candles doesn't really give you a whole lot to go on, right? Look at this one here. I mean, for basically over a week, it just kind of went sideways and then even popped up. Then of course we got this sell-off. So I wouldn't read a whole lot into yesterday. It wasn't what I would call an extremely bearish candle. Although, here's something that I've been looking at is let's flip over to, well, let's start at a monthly chart just for the fun of it because the monthly chart's pretty interesting. What you got here is you got 12 green months with one, I should say, here's 12 months. You've got 11 green months. And April, I believe that was April, was the only down month. And so what I was just talking about a minute ago about the market being sort of extended is the further I sit back in my chair and sort of look at this current run we're on, the more it looks similar to this run, right? This run here in 2020, just kind of straight up. And so it's kind of interesting, actually, to see the similarity. The angle is almost the same, right? I mean, depending on how you zoom in or out. There we go. That's a nice looking angle there. Look at the trajectory. I mean, I could actually the current trajectory is a little bit steeper of an angle, right? If I do a trend line sort of up, across these lows and up across these lows, you can see that this one's even steeper. So, and let's see, when you talk about how many up months in a row, right? 2021 was pretty amazing. There was only 3 down months the whole year, right? 2020 was an outlier, obviously, because of there's the pandemic sell-off right there. So from intraday high to intraday low, you were looking at 35% sell-off there. So that's pretty amazing. And people that use, the statistics that come out that use like, end of day closing prices or end of week or whatever will tell you it was about a 30% sell off. But I've always measured everything from intraday high to intraday low. So for whatever reason, usually I'm looking at the daily charts, and so intraday matters to me. The extreme high and extreme low, and I remember it was 35%, big sell off. So anytime an index sells off about 30, once it starts to sell off, once it sells off 30% or more, in my opinion, it's time to put some money to work. And that doesn't mean that, it can't sell off more, but and I've mentioned that to people in the past, people that didn't know anything about the stock market or anything like that, and is it a good time to buy? And I'm like, when the best time to buy is for whatever reason, when you see the market down 30%, that's a good time to put some money to work, right? Anyway, to put a little bit of money to work. Say you were all not involved in the market. So there's what the monthly looks like. That's a pretty strong trajectory. Let's look at the weekly here. Um, the weekly is quite interesting because this week so far what does that look like? It looks like a little sort of pivot high candle. Like if the week closed right now, um, you'd be looking sort of for, an evening star, I guess you call it. Pivot high, evening star. Um, you'd be looking for, a little confirmation to the downside. So the weekly looks a little suspect, but here's the thing: is like we still have all day today and the next 2 days, right? And so this guy here, we're getting a little bit of a rally off of the open now. So this candle right here could easily turn green on the week. I mean, market up at all-time highs. So let me zoom out on this weekly chart a little bit. You guys will recall, this is practically a textbook cup and handle pattern here, which we talked about, in 2022 and 2023. Even as this market was sort of selling off and acting really rough over here, on the show here, we talked about, as much as it seems like the market is, rough and wanting to go down and could tank, objectively speaking, like, if we didn't know what we were looking at, if we were just looking at the pure price pattern, I kept saying it looks like a big sort of cup and handle forming. And then right here, on some of my S&P charts, which I don't have, I just have like my S&P candlestick chart here. I've got like 6 different charts with different markups on them, but anyway, we had the channel drawn here, and that was the handle. And then lo and behold, right, here's something interesting too. So this is 1 year ago in October, right? We got that sort of end of October. Let me zoom back in here. Let me zoom in so we can see, last year. So there you go. So here's basically where we are right now. And of course, the market had been, had sort of peaked out and been selling off, but the last couple of weeks of October, we got a pretty big sell-off there, right? I mean, I suppose this would be this week. We got a, well, I'm sorry, no, this would be this week right here. So, because this is the first week in November. Anyway, it's just interesting. It's interesting to see how last year behaved, but it's kind of the opposite pattern of what we have right now. And the market had been peaked out in July and had been going down into October and then turned around in November. So we've basically we had the same thing. The market sort of peaked out here in July and sold off, but it turned right back around. I mean, it literally turned around and we had 4 weeks of downward price movement and then it just took off. So it's going to be interesting to see how things play out here. Earnings season is kicking off right now. Well, as long as we're looking at the weekly charts, let me just flip over to the Qs here so we can have a gander at how the Nasdaq's doing here. There we go. Sometimes these stock charts, they just drive me crazy sometimes. So I know I complain about that every week, but I mean, they're great charts and everything, but there's some quirks to them that really bug me. As far as as far as like being able to zip around and do different things on the charts. Anyway, same sort of thing over here. Big giant cup and handle, big run up. Interestingly enough, and a sell-off that began in July, the summer sell-off, and so the Qs and the Nasdaq is basically like kind of pushed right up against the prior highs from over the summer. It's right there, and so it's going to be extremely interesting to see what happens from here, to see how this plays out, right? And of course, a lot of this is going to depend on earnings of the mega cap stocks, the big guys, right? Because as I just mentioned, we're right in the thick of earnings season here. So let's look at Apple. So we're on weekly charts here, right? I've always been an advocate of analyzing the market and stocks, individual stocks, on multiple time frames, especially when you're looking towards like swing trading, which is typically like I would say the most popular mode of trading and investing is, hey, I want to buy a stock and, hang on to it for, a couple of weeks, a couple of months. And I've always been a big advocate of taking some profits off the table when they're there. Right, lightening up a position, because that, and we were talking about this on this show, 10, 15 years ago, the whole strategies that we used to discuss about lightening up, taking some profits, because as we all know, there's tons of stocks out there where you could have had a great profit, and then it just, if the longer you hold on, eventually it evaporates, right? So anyway, but that's I didn't come to discuss strategy today, although I probably should start putting together some different things like that. So kind of taking the show in a new direction here, because I've been updating the websites and working on some stuff, and so in 2025 I want to get back to some of the original stuff that we were doing. And anyway, I may put together some interesting strategy stuff for these shows, rather than, and maybe some trade setups too, stock ideas. That's another thing that I'm thinking about getting back into, is actual, swing trading strategies. So, as you know, we've been doing a lot with futures recently. And that's kind of where our primary focus has been, is on day trading futures. And I should probably do a show all about that, because, man, there's so many advantages. There's so many advantages to day trading futures, I should say, that eventually, and this is the funny thing too, right? We've been doing this for over 20 years. And so eventually, it seems like people get started in investing, and then they get into trading, and then some people gravitate towards options, which is a whole nother story. And then it seems like eventually, once someone has enough experience, they begin to gravitate towards trading futures, especially if they want to be a real active trader. So many advantages to trading futures, but here I digress. Look at Apple here. This is really, it's waiting on earnings. Excuse me. I'm still getting over that cold from a couple of weeks ago. It likes to linger. And when I talk a lot, it for some reason I start coughing. Anyway, look at Apple. I won't draw it here, but you're kind of double toppy looking, but that doesn't mean it can't break out and go for another run, but to me it seems more like sort of a wait and see for how the earnings turn out. Um, Microsoft, I was actually, a couple of weeks ago here. Microsoft on the weekly chart's actually pretty interesting. It's got a decent pattern. The 50-week moving average is definitely viable, especially on this particular stock. Look back here where Microsoft went into this sell-off, and then it rallied literally to the 50-week. And then look at this price action here. So I used to have a program a long time ago. I was using some charting software someone built, and you could click a button and it would curve fit a moving average to a particular stock that you had on it. It was super cool. And so I honestly don't know how viable, curve fitting a moving average to an individual stock's behavior is, but it was kind of neat. It was fun to do because it would just automatically. And so what reminded me of that is like, if that program was still around and you click the button on this chart, this is almost exactly what it would do as far as curve fitting a moving average based on this weekly chart. So Microsoft's kind of, obviously sold off, bounced, made a lower high. It's kind of selling off a little bit here. But at the same time, certain stocks like this, like when they do go into sell-offs, right, that's when they get interesting. I mean, rather than chasing them at all-time highs, it's always good to have like certain stocks on your watch list that could potentially be setting up. Is Microsoft set up right now? Well, not really. Let's look at the daily chart of this just to see how she looks. Yeah, so obviously, there's actually a couple of interesting things here. One is it's kind of sitting right on support here. However you want to draw this. This candle is obviously sort of an outlier, but Microsoft is sitting right on support here. And of course, there's, whoops, see, it goes back to what I was saying before. I shouldn't actually have to click that to put that on there, but there is the 200-day and the 50-day moving average. Yesterday, Microsoft closed above the 200-day and above the 50-day, and today, right, it opened and is trading below the 200-day and 50-day. Which, in theory, people would say, "Oh, that's bearish," right? I mean, if I told someone, "Hey, here's a stock that's trading below the 50-day and below the 200-day," and they'd be like, "Sell," right? But look, look at the last 2 or 3 times. Especially back here. Now, these are pinched together, which is a little bit different, but look back over here, September. It went below the 200-day. Well, it was obviously below the 50-day, but went below the 200-day briefly, and then boom, huge rally. And so same thing over here, it sold off, traded a few days below the 200-day, boom, huge rally. So, but in the big scheme of things, this overhead resistance line is the big deal. right? So, and this, this could be adjusted. I mean, just I always say, just because the price pokes a couple of pixels below a trend line or moving average or support level, I mean, a few pixels don't mean anything, right? So, tons of support at 400 here too. That's the other thing is, 400's kind of the line in the sand here, but look, it's already starting to rally as I'm talking about it. Anyways, Microsoft looks pretty darn good here. I shouldn't say for a buy right now, but it looks pretty good for a potential setup in the future. So ideally, you'd want to see it consolidate in this area, and I moved this out a little bit because the tighter it gets and the more sideways it trades in this area here, um, break out over 425 out in the future. And so, a lot of times they don't make it to the apex of these triangles. So keep that in mind. Typically your stock will get fairly close to the apex of the triangle and then it'll break one way or the other. The great thing about, putting Microsoft on your potential, buy list or the potential buy list is the idea that, if it does break down, well, then it breaks down. So, but it's definitely setting up here for a potential long over 425, right? And of course, if it were to rally straight up right now, it's probably going to run into resistance here. So, I'm going to keep a close eye on that. Looks pretty good. Let's see, Meta. Meta's been hitting highs back on the daily chart here, so kind of looks like it's rolling over. Here's the thing: these stocks they go on these runs, and then it stalls out, and they kind of pull back a little bit. So I should go back to the weekly chart here because I talked about Google last week. Let me go to a weekly chart here. Google's sort of setting up too. There's there's the whole thing with potentially breaking up Google and all that stuff. But on the daily and the weekly chart, there's a nice sort of zone of overhead resistance here, and you got to keep in mind that nothing happens quickly on a weekly chart and a monthly chart. I've been saying that for for years, but nothing happens quickly on these, longer term charts. And so, I mean, you could spend weeks sort of chopping around in this area here, and not doing anything. And then, but what we're looking for eventually is a break over this level here, this overhead resistance to form the big cup. So, interestingly enough, there's your 50-week moving average again, right? We were looking at that on Microsoft, and it looks like a pretty, I mean, look at it back here. Look at how the 50-week moving average gets sort of respected back over here. You got this pullback basically to the 50-week. You pulled back to it here and bounced off of it. So that's convenient because everybody looks at a 50-day moving average, a 200-day and a 50-day. And so when I flip over to the weekly chart, it seems like this 50-day moving average is relevant. I don't have to screw around and change any moving averages, right? So anyway, um, there's always the headline risk and the whole, Google getting broken up thing, and the fact that their search results suck nowadays. We haven't talked about that, and that search Chat GTP or Search GPT and Perplexity and some of these other AIs, I think eventually are going to eat their lunch, to be honest with you, because younger people are gravitating towards, searching AI, even Bing AI. So, the thing of it is Google is kind of, if you're looking for a product, right? If you're looking to buy someone an air fryer for Christmas or whatever, you're probably going to go to Google. But if you're looking for actual information, most people, and especially younger people, and myself included, are going to go to, Perplexity. And then of course there's Claude. So I never actually, I don't fool around with Chat GTP because somehow or other I found Perplexity, and I got to tell you it's amazing. I mean, because basically whatever I used to search at Google for, now I will search there, assuming it's not like I'm looking for, a certain product, which typically you'll search Amazon for, right? Anyway, as much as we could debate the pros and cons of, the company Alphabet, and yeah, I've been calling them Google for so long, I'm never going to call them Alphabet unless they break it up and Google and Alphabet are two different companies. So anyway, that's a pretty good technical setup there. It just needs a little bit of time. Let's look at Tesla. Yeah, Tesla had they were in the news here. They were in the news here this week, and looking at the reaction here, well, here's this week, right? This week nothing happening, but last week kind of a sell down. Yeah, so I mean, there's not much to say about this here other than the fact that I honestly, in my old age, I'm getting to be more of a fan of support and resistance levels than I am trend lines and moving averages, right? And so there you go. There's the big overhead resistance level on Tesla, and and it's just kind of in no man's land right now, right? And obviously, obviously there's lots of zigs and zags in that. I think back there over on this pullback, I kind of liked it, to be honest with you. I think we talked about it on the show here. Um, and it had a pretty big rally, but as it stands right now, of course, I should have drawn this trend line right here because it's kind of interesting to see that the price right now, while it did, actually break above that trend line, it's been zigging and zagging all over it. I mean, that's a pretty valid trend line. Look at all these touches. So I'll pull that thing down here a little bit. Like right now, I could draw it like with the wicks like that. So this is an interesting case too because if I draw it across the wicks of the candles like this, say, um, it looks a lot different. Yeah, this is one of those cases, and this is actually, you don't see this a whole lot, right? It's very difficult to find a case where you get a trend line with literally all these touches on the highs, as many as this, with the price like like sitting right on it like this. And so, if I took this trend line and I said, well, we don't want to use the wicks, we're looking at candlestick charts here. Let's draw it across the bodies, right? So, I mean, we did have a poke back below that, but it's just in an interesting spot. Keep in mind, this is a weekly chart too. So, really super interesting spot here. No matter how you draw that trend line, we're actually kind of hanging above it. And there's that 50 week. Yeah, I don't know much about the 200 week moving average. I mean, this is the gray line is a 200 day. Um, but the more I look at these stocks, the more the 50 week looks kind of interesting. So on the and so you can see that the 50 weeks kind of going sideways, price is holding above it. To me, it's sort of in no man's land. Like it may zig and zag around in this area a little bit. Um, this trend line is almost irrelevant because what's important here is, and here's what, there's some people out there over the years, technical analysis doesn't work, or you can't put too much in it. But here's sort of my train of thought, and I'll leave you with this because I'd like to keep these shows at 30 minutes. It's basically there's a law of nature that's irrefutable that says the following: if, right, and that's a big if. But this is the way I look at it. If for some reason Tesla's going back to the highs, if Tesla's going back to the highs and beyond, it has to pass through this line to get there, right? And nobody can argue with that. Like, there's nobody that would argue with that fact because basically, like I just said, it's a law of nature. It's sort of an irrefutable, you know, that's just how it is, right? In order for Tesla to get back to 400 or to the highs, it has to move above this resistance level. And so that to me has always been sort of the beauty of technical analysis is you can't argue with something like that. And so the idea, and that, of course, that doesn't mean that it can't, break up above this, go to 300 and then collapse, right? That's possible, but it's definitely a given that it's, on the way up. And so that's typically why traders and investors look to buy breakouts over resistance. And so going back to, real quick here, we'll go back to the overall S&P. That's why when you get into what we call blue sky territory, like we are here, and regardless of whether we get a little bit of a pullback this week or whatever, or next week, I mean, because that that weekly, look at that weekly sort of, boy, you talk about a doji. And obviously the week's not over, so we don't know what that's going to look like, but at the end of the week. But I mean, regardless of that, there's literally, well, I shouldn't say that. There is, this week's high is the new overhead resistance, but there's been hardly any volume that's traded at that level, so it really doesn't matter. That's sort of the important thing. It makes no difference because what you got to have is, like, for overhead resistance, you got to have, like, a high here and then a pullback and then a couple more weeks of highs. And so, like, this line here, when I drew this was clearly, a big level of overhead resistance. As it stands right now, there's literally no overhead resistance, so anything could happen. It feels like the market kind of wants to pull back, but as we saw on that slide I showed you, typically, the last couple of weeks of October tend to be just sort of sideways. So anyway, we probably do need a pullback. So I flip back to the daily chart real quick, see how today's shaping up here. So yeah, I mean, this was red when I started the show this morning. When the market opened, it was red, and it's trying to rally back up a little bit. So, be interesting to see whenever you get one of a candle like yesterday. You kind of want to see how, if the price trades inside of it. If for some reason this session, I mean, everything's kind of green right now. But if for some reason this session, if we were to go red and break yesterday's low, then I'd be looking for a little bit deeper pullback. But this is the real line in the sand of support here. So a little bit of backing and filling. Quite frankly, this run here from 5,700, the mid 5,800s. That's a pretty good run in a short amount of time. So a little bit of a pullback here would sort of be warranted. So anyways, thanks for tuning in. I will see you back here, same time, same place next week.